Hey friends, Tony G here, your mortgage planner. One of the most common questions I hear is this: how much house can I afford on an $80,000 salary? Well, today I'm going to walk you through the math, give you the real world examples, and show you how different loan programs like FHA, conventional, and more may give you the flexibility you didn't even know that you had. So stick around because the difference could mean buying now instead of waiting several years. So most lenders start with what's called the 28-36 rule. That means no more than 28% of your gross monthly income should go towards housing costs and no more than 36% when you include all of your debts. So on an $80,000 salary, that's about $6,600 a month. You're looking at about an $1,800 to $2,400 a month payment target for your monthly budget. But that's just the starting point. With today's rates, say around 6.5% to 7%, and just 5% down, $1,800 to $2,000 a month translates into a home about $275,000 or $325,000. Putting 20% down, suddenly you might be $350 to $400 range. So here's where things get interesting. FHA loans, which are backed by the Federal Housing Administration, are more flexible on debt to income ratios. In some cases, with strong compensating factors, FHA may allow you to go up to 55% of your income toward total debts. That's way above the conventional 36% rule. So conventional loans backed by Fannie Mae and Freddie Mac, they usually cap you at around 45% DTI. But again, with the right factors in place, you can stretch a little higher than what people often expect. So now, you may ask, what is a compensating factor? Consider it like financial bonus points. So let's say a higher credit score showing you that you manage debt well, a large down payment or significant cash reserves in the bank, a history of paying rent that's equal to or higher than the new mortgage payment, or even a stable job with guaranteed future income increases. These factors tell the lender, yep, hey, this borrower is less risky, so they're more comfortable approving you for a higher monthly payment. In real life, that could be a difference between qualifying for a $300,000 house and a $350,000 home. So let's give you a few quick examples. I recently worked with a single borrower making around $80K a year. They had no debt, but only 5% down. Conventional capped her at a little bit lower, but FHA allowed her to stretch comfortably into a $325,000 home, and she was thrilled. Another couple I worked with had $80,000 in combined income, had 2 car payments, and a little bit of student debt on paper. The 36% rule looks super tight, but they had strong credit scores and cash reserves. The lender allowed a higher ratio, and they bought a $310,000 home that fit their lifestyle without being house poor. That's the power of understanding your options. So here's the bottom line. On an $80,000 salary, your affordability isn't locked into one number. FHA, conventional, USDA, VA, every program has its unique guidelines and compensating factors that can unlock more buying power than you might expect. That's why having a mortgage planner like Tony G is important. My job isn't just to crunch numbers, it's to design a strategy that reflects your income, your debts, your goals, and your comfort zone. Because at the end of the day, it's not just about what you qualify for, it's about what you're comfortable living with. So if you're asking yourself, can I buy a home on an $80,000 a year salary? The answer is heck yeah, and you may have more options than you think. Let's run the numbers for your unique situation. I'm Tony G, your mortgage planner, teaching you the basics.